Let's turn now to Scott Siefers to talk more about the bank's earnings. He is a bank analyst at Sandler O'Neill Partners. Welcome, Scott. Nice to have you here.
Hey, Sue, thank you for having me.
What's your overall opinion? I mean, Wells Fargo came in better, even though obviously the guidance was not as good as the market would have expected. But
Yep.
JP Morgan seems to be firing on all cylinders.
Yeah, and I would say the same thing with PNC, which was the first large regional bank to report this morning as well. For the most part, I think what we're learning is that we had been cutting expectations for the better part of the last couple of months, and perhaps we were a little too punitive.
Now, what about the loan and lending side of the business? Some of that obviously is dependent on where interest rates are going, but that seemed to be a bright spot for almost every bank that's reported.
That's exactly right, particularly on the commercial side, Sue. What we're seeing is there was all this capital markets dislocation in the fourth quarter that allowed the traditional banking space to recapture some market share, and it looks like they've sustained or retained that market share here into the first. So that's definitely a bright spot for the group.
Which one are you going to be watching that we still have to hear from? I think Bank of America is kind of a broader swath of the economy that we might get a better read on.
Yeah, that's an excellent point. I think for U.S.-based investors, B of A kind of retains the position that Wells Fargo used to, which is to say it's probably the best broad indicator of the health of the U.S. economy, whether it's the traditional sort of Main Street consumer or you even have the large capital markets component as well. So in the U.S., B of A is definitely the one that people will be watching. And then we'll have a whole swath of regionals reporting over the next couple of weeks as well.
How do you expect the regionals to do?
Generally pretty well. PNC is probably the best indicator so far. I think what you'll see is loan growth helping to overwhelm some flattening or, worse, potentially some compression in net interest margins. But overall, the group has a lot of capital management opportunity and a lot of expense leverage as well. So we generally feel good about the group.
All right. Well, we're off to a good start. Scott, thanks so much.
All right. Thank you, Sue.
Scott Siefers with Sandler O'Neill Partners.